Welcome back to Yahoo Finance Live. We are seeing shares of Tesla soaring in this session, up well over 7% on news that the company is considering a stock split at its annual shareholders meeting later this year. If shareholders approve, that would mark the first split since August 2020. Let's bring in Yahoo Finance's Pras Subramanian, who's following that story for us. And obviously, Pras, investors liking the news when you consider, I'm looking at the numbers here, shares have more than doubled since the last split back in 2020.
Yeah, it's surprising that we're hearing about another split here, but, why not, right? Like I said, the stock bouncing here nicely, second time in less than 2 years. Like you said, they're going to ask about this. Shareholders going to vote on this at the next annual meeting. Probably it's going to be in June. We don't know the details of this new split, but, following their first split back in August 2020 was 5-for-1 split. Shares jumped dramatically. Post that split, shares then went back up to $1,000, and then they also crossed that magical $1 trillion market cap. We're also seeing some analyst commentary already pretty bullish. Dan Ives saying that following splits by Apple, Amazon, and Google recently, this move by Tesla is a smart strategic move that will be a positive catalyst for shares going forward. Now, theoretically, splits shouldn't really matter, right? Because you're not really creating more value, just expanding the share base. But they do work for a number of reasons. And a couple of things I want to note here. Typically when you make shares cheaper, you're expanding the amount of people that can buy shares, like everyday investors. They expand that shareholder base. You also make it more attractive for indices, right? It's more easily. You can add these shares that are cheaper to these indices, like the S&P, the NASDAQ 100. Funds that track these indexes must start buying these shares to sort of match the index. So you see more buying there from fund managers. And lastly, these make options cheaper, right? Cheaper share prices make options cheaper, and this has become a big deal with retail traders, the Wall Street Bets community getting into derivative trading. So a number of reasons why you could see a stock split that shouldn't really move the stock, move it pretty dramatically.
Sheesh, Pras, you can do Yahoo U for me. That was an excellent breakdown of how stock splits work, man. Hey, I want to ask you about another news headline on the Tesla front, that being, of course, the Shanghai Gigafactory. We know that there have been more lockdowns in China because of their zero COVID policy. How is that going to affect production in that very critical market for them?
Yeah, Brian. So we're possibly looking at a second shutdown this year. Bloomberg is reporting as part of Shanghai's sort of two-phase COVID testing sprint. They're shutting out part of the city, and the Gigafactory is located in that part that's part of the first shutdown. So it sounds like they're going to be shut down from today and then through Friday at the earliest here. It's at least 4 days of being shut down. Recalling the last shutdown was for 2 days. So this is dramatically a bit longer of a shutdown of that factory. And, we're not sure how long this could be, but if you think about it, it could be a decent amount of production lost, right? Because, you have 1 week shutdown, and it might take another week to get everything back online, get those assembly lines back going. So 2 weeks of shutdown, it's almost, using back in the hand math, it's almost 17,000, a little bit more than 17,000 vehicles that could be lost in terms of production. So it's not insignificant here. We'll have to keep an eye on it, especially for investors that are watching that China bull case being such a big story of Tesla and the shares moving higher. But, that stock split just kind of overshadowing any of this stuff, Brian.